Hey guys, Tony here. I am finally getting around to doing my summary video for AMC Q1 earnings, and we'll talk about that at a very high level, but I really want to focus on some things that other folks aren't talking about. We'll talk about the cash burn in Q1. I want to talk to you about our status here in Q2 now that we're about halfway through it, and my revisions to my Q2 outlook. And I want to talk to you about the debt restructuring after having some conversations over this weekend with a veteran in the industry, bond portfolio manager, and how talking with him has kind of shifted some of my thinking about the debt restructuring. This is critical to us as AMC investors. So without any further ado, let's get right into the info. As we already know, Q1 exceeded industry forecasts. It even beat my own forecast, which I try and do relatively conservative. And I'm happy. I'm happy that Q1 exceeded forecasts, but it still was a loss for the quarter. Not really surprising because we knew that Q1 was going to be weak due to the actors and writers strike. Total revenues came in at $951 million compared to $954 million same quarter a year ago. Net loss improved to $163.5 million compared to $235 million a year ago. Net cash used in operating activities comparable at $188 million net cash used, and cash equivalents at the end of the quarter on the balance sheet came in at $624 million. With the 2024 Q1 revenue being very similar to the Q1 revenue a year ago, it is worth spending a couple of seconds to throw up a table here and explain to you guys why we got such a different outcome on the net loss. Negative $163 million versus negative $235 million. With almost everything on the income statement being the same, it is the category other expense and income that drove this big difference between 2023 and 2024 Q1. And we can see the details here on the breakout. Remember that shareholder litigation? Yeah, it cost the company $126 million in Q1 2023, and that is what weighed so heavily on that quarter. And here in Q1 2024, the company disclosed that they had a net income of $36.2 million related to a vendor dispute settlement. Unfortunately, they did not give us any details on who the vendor was or what the dispute was, but a net gain to the company of $36.2 million in 2024. When we add up these green and pink items, the income and expenses in the other category, this explains that $80 million swing on the net loss. I know a lot of people had questions about where the cash went, that $250 or $260 million that the company spent in Q1. And I did a video for you guys just on the cash flow statement a couple days ago. But just to recap, if you didn't watch that video, when we compare Q1 2023 to Q1 2024, the main things that jump out as differences to explain this $135 million cash burn only in Q1 2023 versus $250 million in Q1 2024. The company did receive an income from the sale of the Saudi cinema company in the amount of $30 million. I know you guys often hear the trolls and the haters saying that the company lost $1 billion from that Saudi deal. Absolutely not true. You can see this here, or go read a 10Q and get a little bit more educated. $30 million proceeds from disposition of the Saudi cinema company, and $146 million down here in the bottom, net proceeds from equity issuances in Q1 2023. Subtract out $54 million in that same quarter a year ago for repurchase of second lien notes, and that explains really the difference of the $115 to $120 million burned between 2023 and 2024. It is worth mentioning that the revenues for the quarter stayed essentially the same despite lower attendance in Q1 2024. But other than that, I really don't have much more to say on Q1. Let's move on to the discussion now about where we're at in Q2, and then we'll talk about the debt restructuring. But before we do that, I just remembered one other thing, because I hear some people asking, where is the revenue for the popcorn? Where is the revenue for the chocolate? They must be hiding it in a separate set of books somewhere, right? Or a different company. Totally ridiculous, guys. Totally ridiculous. Get over these conspiracy theories. There's one set of books for AMC. There's 3 buckets for revenue: admissions, food and beverage, and other. So if there is revenue from popcorn sold in retail stores or chocolate, it is going to be in one of these 3 buckets. Which one it's in, I don't know. The company's not breaking out for us. But rest assured that revenue is in there. If it's profit or not, I can't tell you because we don't have the breakouts. Now that Q1 is behind us, attention is rightly starting to focus on how is Q2 going to perform. And I had originally 3 or 4 months ago anticipated that Q2 domestic box office was going to come in as high as $2 billion, maybe a little bit higher. We do have coming in right now the numbers for this weekend, May 10th through 12th, coming in just under $90 million, with Kingdom of the Planet of the Apes bringing in an estimated $56.5 million. But here halfway into Q2, we're only at $632 million. That is a long way from $2 billion. Based on the box office numbers we're seeing so far for Q2 and with the Fall Guy underperforming, I'm going to revise down for myself my own expectations for Q2, whereas previously I had it at $2 billion to slightly over $2 billion. I'm now expecting Q2 to come in somewhere around $1.8 billion domestic box office. But I will cross my fingers and hope that one of these movies coming up gives us an upside surprise. You can see the red boxes on this screen, all of the movies that underperformed what I had estimated they were going to do in Q2. A couple of them are meeting expectations. Really, how Q2 ends up is going to be dependent on these movies that we have coming out in the next 7 weeks. Kingdom of the Planet of the Apes, If, the Garfield movie, Furiosa, Bad Boys Ride or Die, Inside Out 2, and A Quiet Place Day 1. I'm a little bit sad that A Quiet Place Day 1 comes out at the very end of Q2. So the numbers for it are going to be more loaded into Q3. So I guess my general thoughts are maybe ratchet down expectations for Q2 just a little bit, although it is fine to be hopeful that something outperforms and go see a movie. With that out of the way, now let's wrap this video up with a quick discussion on the debt restructuring. We all know about the upcoming debt due in 2026, a rather substantial amount, and CEO Adam Aron talked about it on the earnings call last week. He said, "We've been working with our board of directors and our investment banks for almost a year now in discussing the smartest ways to extend the maturities of our 2026 debt into future time periods. The good news is that we have lender syndicates who generally like AMC, have worked with the company before, and are working with the company now. And he's hopeful that they will come to some conclusion that will allow us to push out the debt from 2026 into future periods. There's nothing to announce yet because there's nothing final or done yet. There's no agreement that's imminent, like it's going to be announced in a day or a week, but it has our highest attention. Now, I have personally been of the mind that they were going to try and get this done in the first half of 2024. But as I mentioned at the beginning of this video, I talked to an expert in the industry of fixed income, a 30-year fixed income portfolio manager, and he had some thoughts that he wanted to share to me, additional perspective, additional color about how a fixed income manager or an investment bank might be looking at AMC's situation and how they might be wanting to structure a deal on pushing out this debt. A couple thoughts from that conversation that I want to share with you guys. I already shared it in the Discord a couple days ago. He did agree that nobody wants a bankruptcy, including the bondholders, and that it is in everybody's best interest, both AMC and the group of debt holders, to work out a deal. Really, the question then comes down to the structure of the deal and the timing. And he said that in the fixed income industry right now, there's not a huge appetite for junk bonds, which AMC unfortunately is in the category of. However, that could change in as quickly as 1 or 2 quarters. And there are a couple of key things that the debt holders would most likely like to see. Number one being AMC book 1 or 2 profitable quarters and have insight, which we already know we do, to better years ahead. The second thing that he said, and this is a bit of an unknown, but there is a chance that they could want to see some additional cash on the balance sheet. I mention that because if that comes to bear, then we could be facing some additional dilution. This is an unknown. I just think it's important to discuss it and have it out there for you to be thinking about. Final thought for now on that discussion is he thinks, and Markets with May said the same thing. She said it numerous times, that it would be in AMC's best interest to wait till later this year or even early next year and see if interest rates improve. Because if the Fed cuts rates, that kind of changes the dynamic more in AMC's favor. And Adam Aron did say that there is no agreement imminent. Maybe, perhaps, I was incorrect that the debt restructuring is going to happen in the first part of this year. Maybe it is in AMC's best interest to wait to later in 2024 or even early 2025 to see if market conditions change and their own financial situation improves with better box office and better revenues. And then AMC has maybe a bit more of a favorable negotiating position. So we will have to keep our ear to the ground and our thinking caps on as we think about how this debt restructuring is going to happen and when. There are a lot of different ways that it could go, as you guys probably know. That is going to be one of the main things that I am concerned about getting resolution on for an investment in AMC. In addition, I'm going to be watching the cash on the balance sheet, and every quarter, at the end of each quarter, as we see what the box office was, I'm going to be doing my own cash burn analysis so that I can get an idea for myself what I think the company's cash position is going to be at the end of the quarter. So cash on the balance sheet, cash burn, and debt restructuring are the three key things that I'm going to be looking at. Plus, of course, the box office every single quarter. If you listened to the call last week, you know Adam Aron said that Q2, the one that we're in right now, will be better than Q1, but not as good as last year. And then things start improving the second half of this year into 2025 and 2026. So AMC is not out of the woods yet. Things are improving. Be judicious as you decide what to do with your trading in AMC if you are an investor in AMC. And I will continue to share updates from time to time about how I am trading this stock. I am back in AMC as of Friday. Some of the cash secured puts that I had sold did get exercised. So I'm back in AMC under $3 a share cost basis. I wish all of you a great trading week next week. If you have any questions or comments, drop them down below for me. I love to hear from you guys. I am Tony Denaro, and I will see ya on the next video.